So welcome everyone. Today is a discussion on BTC on balance sheets, the case for Bitcoin as an inflation hedge. So today we have a special guest, Adam Blumberg of Interaxis and Planner DAO. Adam, so thank you again for joining us, and we're really interested to kind of get your take on this because it's a topic that's starting to proliferate. There was a little bit of it in the last cycle, but we're starting to see some big moves recently with Semler Scientific adding 40 million in Bitcoin to their balance sheet. And I just wanted to kind of start off by discussing kind of what makes digital assets, particularly in this case, Bitcoin, potential hedges against inflation, and how do they compare to traditional assets like gold?
Yeah. Let's get into that real quick, Taylor. Before we get started, I need to say also that part of my work or another place I am part of is a multifamily office called Bespoke Group. And I know that you and I didn't talk about that, but multifamily office called Bespoke Group, where we're doing super advanced planning for those that are crypto wealthy, founders, OGs, those that have made their wealth primarily in crypto, doing some advanced planning, advanced structuring, advanced custodial work. So obviously, nothing I say here is financial advice, and I have to say that. But we also get this purview into what some of these folks are doing with large amounts of Bitcoin or large amounts of crypto, because a lot of the clients that we talk to are the real kind of Bitcoin OGs, the ones that were in it from 2010, 2011, early on, and now are have more wealth than they could have ever imagined, because at one point they had a laptop that was running Bitcoin code. Right, which is a little bit crazy to think about, but not anymore. In honesty, not any more crazy than thinking that some guy came up with an idea that you and I could, connect online and share pictures, and is also a billionaire now.
Mm-hmm.
Right.
Yeah.
So, but with that, we'll go back to the question. So, what makes Bitcoin a good kind of inflation hedge, store of value? As we know, as those of us probably in this room know, the Bitcoiners especially have been talking about Bitcoin as a store of value and inflation hedge for a long time. And the problem with that argument has been there hasn't been inflation. Right. Up until a couple of years ago, there was no inflation. The government could just keep printing money, but they were doing it at a relatively slow pace. And as the US government was doing it, everyone else was printing money as well. And so the value of the dollar kept going up and up and up. Everyone in the world kept seeing the dollar as this place where they were going to store value, this asset where they were going to store value. And therefore, there was a tremendous demand for dollars all over the world, even though we kept printing. But the Bitcoiners, especially, looking back at like Austrian economics and all that, were saying that inflation is coming. You can't do this forever. We need a place to store value or to hedge against inflation. And so it wasn't until COVID times when the US government started printing trillions of dollars at a time, right? More money printed, I think, during COVID than the entirety of the United States, since the formation of the Federal Reserve. When kind of institutional investors started to take notice, and they were like, man, there might be some inflation after all this. You can't just keep doing this and doing this and doing this, because the amount of goods and services in the world aren't increasing at the same rate as the amount of dollars.
Mm-hmm.
And now we're at a point where world productivity is not going up at the same rate as new dollars are going up. And therefore, we're probably going to have inflation. And famously, it was in 2020, right? We were all still locked in our homes. And Paul Tudor Jones, the famous macro investor, said, I need a place to store money. I think there's going to be inflation. I've been doing it in gold for a while. I found out about Bitcoin. I'm gonna throw 1% to 2% of my assets into Bitcoin, along with gold and everything else, and that kind of set everything off. Right then, some of the others, Bill Miller, Stanley Druckenmiller, came out, and then I think everyone kind of took notice and was going. And so many people in the world, so many people in our world, in the financial world, started going, I need to investigate this inflation thing.
Mm-hmm.
And we say that because we hadn't had inflation for so long. I mean, most financial advisors, which is a lot of the people I work with, had never lived in a world, had never worked in a world where there was inflation, right? It was always 2 to 2.5%. And so they never really had to plan for that. It was always, invest in equities and hope they, and they would go up, and the government arbitrarily uh, um, would arbitrarily keep interest rates low, inflation low. Anyway, that, a lot of background there, but that moves us forward to, why is Bitcoin a good inflation hedge? Well, Bitcoin is a good inflation hedge because we know exactly how many there will ever be. We know exactly how many there are. We know exactly where they are. We know how hard they are to produce, and no one can just go create more. You can't inflate away the value of Bitcoin. You can't inflate, you can't create more, right? And as most of us know, that you can't just create more Bitcoin. Well, I'll say this. Theoretically, you can create more Bitcoin. Theoretically, the Bitcoin core developers can say, look, we need to change the number of Bitcoin that will ever be created from 21 million to 42 million. And there could be a Bitcoin improvement proposal, and all the miners in the world would have to vote on that, right? But the beauty of Bitcoin is the incentive mechanism won't really let them do that. Well, it will let them. They won't vote for that, because the moment that they do that, the moment that they vote to increase the number of Bitcoin in the world, the value probably goes to zero. So why on earth would they do that, right? So it's baked into the incentive mechanism. There's not a hard and fast rule like we have with government that says you can't do this until such time as Congress decides it's in their best interest to do something new. It's, you can do it if you want to, but why would you? Like, after you've invested all this time and money and effort into miners and energy and everything else, you're not going to make the value of your product go to zero, because the most of the value is based on the fact that it's not that easy to produce, and we know exactly how many there will be.
And who's going to assign value to that new version of that new hard fork of Bitcoin
Right.
too, right? You
Yeah.
need buy-in from everyone and from the network itself. So to
Yeah.
your
They
point,
tried
yeah.
it. Look, they tried Bitcoin Cash. They tried, like they've tried it over and over again. They've tried to say we need more of them. It needs to go faster. All these things, and they're still Bitcoin. To me, it's equivalent to, like, from just a tech perspective, they're still email, right? We have instant messengers, and we have Facebook, and we have Slack, and we have all these other things, and yet we still email people. Like, email marketing is still huge. Email newsletters are still huge. Bitcoin is like email. It's not going away. It's still there all the time, even with everything else that's being built around it, and it's still incredibly important. And you're just not going to mess with it that much. It doesn't get changed very often, and that's on purpose, right? Like, it doesn't adapt to what people want right away, and that's part of why there's this value. So going back to, why is it a good store of value? Again, when we look at historical stores of value, we're looking at something where we have a pretty good idea of how much there is. It's not that easy to create or produce. There's potentially demand for it. So we can get into this a little, a little bit more a little bit later. Why are people doing it now, and where does it fit? But it's because we know exactly how many there are, right? So gold, like, we kind of know how much gold is in the world, but if the price of gold went up, gold miners can go, we're going to double time and bring more gold out, right? And try to sell it at these prices. We can go try to find more gold if we want to.
Yeah.
Right. Like, I live in Denver, Colorado. This was a gold mining city. The team is called the basketball team is called the Nuggets for a reason. Like, they were mining gold just to my west in the Rocky Mountains. That's why this place exists, right? It's why San Francisco pretty much exists, right? It was gold mining town. So if we want, like, if the price of gold went up, people would create more, right? But and kind of like gold, like, gold doesn't have much use beyond being pretty, right? And even then, pretty doesn't get it to where its value. It has its value because we know roughly how much there is in the world, and that's how we're going to store things. We can put it into gold bars. We can put it behind we can put it in safes. We can put it in, dudes with guns, all those things. We can protect it, and we know how much there is. We know the density. We know if it's pure gold or not. Like, we know all those things about it. We kind of know that about Bitcoin, but it's a little better because it's digital. Like, it's a little better because I don't have to hire a dude with a gun to guard it.
Yeah. Yeah. And I mean, on that same point, like, we could also find an asteroid that had, double the world's supply of gold on it, and we could mine it there as well. So that while we may have a fixed supply of gold on Earth, gold is an abundant resource in the universe as well. So there's chances that we could also find it,
Yeah.
elsewhere. Less that's way down the future. But anyways,
Exactly. But
yeah.
look, we've as I said earlier, for the last, I don't know how many years, people around the world stored value in the dollar, right?
Mhm.
The US dollar was the store of value because it was for many people in the world better than what they could get, like better than their currency. And they knew that if they bought US debt, US dollars, like the US government would pay them back, right? Like that was known.
Mhm.
And so that's why it was a good store of value. But when it's in the government's best interest to print more and more and more, then then it ceases to have as much value. And that's what we're seeing around the world right now. And so people are having to find something else.
Mhm. So with Semler Scientific adding $40 million in Bitcoin to their balance sheet, so this is a healthcare company, right? This is a company they're not in fintech. They're a healthcare company. Um, what do you think the strategic rationale behind this was, and why do you think they're pursuing this now?
So, well, apparently they're Eric Semler, who's the president of Semler Scientific, and the founder, is went to, I think, one of MicroStrategy's conferences or something that shows them how to add Bitcoin, how and why to add Bitcoin to their balance sheet, right? Because now Michael Saylor is out there kind of promoting this, and he's the evangelist. And you can look at let's look at what MicroStrategy did. Like MicroStrategy is one of the worst performing public companies of all time up until a few years ago, right? They went public during the dot-com boom, and stock went way up because everyone's stock went way up in the dot-com. Like you and I could launch a company that did virtually nothing in the dot-com boom, go public within like a few weeks, and be worth billions of dollars. And then the stock came down and it never moved for like 20 something years. And they just kind of made a little bit of money and stayed public, and they didn't really do anything until, during COVID. I don't know if he got bored, or, Michael Saylor got bored or something, and started studying this and going, look, well, we got cash on our balance sheet and we're going to buy some Bitcoin, and he was a tech guy anyway. So bought some Bitcoin. And then all of a sudden he's this, the prophet with a PH, not an F, prophet of Bitcoin, the guy who said, I have my publicly traded company. I'm going to take my cash and I'm going to buy Bitcoin, and you can all see it on my balance sheet because I'm a publicly traded company and it's transparent. And I have to show you that. You can get it. And the price went up, and then he's, is on all these news channels and has his, is on the web all the time, and ridiculously is telling people mortgage your house and buy Bitcoin, which is horrible advice. And then, the price goes down and he keeps buying it. And now, lo and behold, it comes flying back up. And now he's worth billions of dollars, not because MicroStrategy is any good, but because he bought a bunch of Bitcoin. And because it's a publicly traded company, he can actually go into the debt market and issue debt so that he can go buy more Bitcoin. So he's doing what I would never tell anyone who's, an individual to do, which is take out a loan to go buy Bitcoin. But he's done it with his company. And fortunately for him, it's worked out well. And now he's trying to get other people to do it. And Eric Semler kind of along those lines. The difference here, I think, is here's where I think the difference is, because I think it's important. MicroStrategy, MicroStrategy was never doing that well as a company, right? And I think he just did it because he's like, we have cash, we might as well. It seems like Semler is more of they're a healthcare tech company. We have ongoing expenses that we think will increase in the future, right? Our expenses are going to increase. They have to buy technology, and the price of a lot of technology is going up. We've had supply chain issues, right? They saw that. They saw the supply chain issues that we had in the last few years. They see there might be issues with us in China if they get any parts or any resources from China. They see that they might have to pay people more. And they're going, how are we going to offset that? Because we can't necessarily raise our prices because there's competition, because you can't necessarily raise your prices requisite to your costs going up. We have cash on the books. What are we going to do? How are we going to offset the fact that our expenses are going to go up in the future? We can do that by having something to store value. We don't need cash. Dollars don't store value very well anymore. They're losing value. And therefore, we need something that is going to go up in price while our expenses are going up. So at a time when we have to sell that asset to pay our bills, we can do so and it'll be worth more than it was when we started. So that to me was the impetus for their initial, I think, $40 million Bitcoin buy, which in comparison to what Semler has done is nothing. Right. But it's a start and it's a publicly traded company, so they have to disclose it. And then I think they went and issued debt and bought a bunch more Bitcoin. I think I read that as well. Right. And
yeah, I'm not sure why I got Selmic. I Semler, you're absolutely correct on that. So yeah, I mean, MicroStrategy has become kind of like proxy buy, like almost like an ETF for Bitcoin in a way, for folks. And very interesting to think about the rising cost of doing business as a use case and a strategic rationale for buying Bitcoin. And I think that the day that they announced that their stock price jumped by like 20%. I'm not sure.
it was more than that. It was
really?
their stock price was in like the low 20s, I think, and it jumped up to I think almost 40 at one point.
Wow.
They'd almost doubled at one point, and then it came back down and it's kind of trickled. So now it's kind of their stock is kind of following Bitcoin a little bit, which it shouldn't, because they're not like MicroStrategy, right? They don't have billions and billions and billions of dollars worth of Bitcoin. They just have a little bit comparatively. But that's kind of what everyone knows them as now. Now, hopefully, I mean, in my mind, hopefully they keep going as an ongoing company, and the Bitcoin thing is a smaller piece of it. They don't get to be another like Bitcoin ETF proxy, right? Because I don't want to see a whole bunch of companies that just do that. Now, look, GameStop is another issue. Like GameStop, I think they absolutely should take what, the issue they just had. They just issued 75 million more shares when their price was at like $40. They absolutely should buy Bitcoin, because who uses GameStop? Yeah, they're a horribly performing company. I said the other day, I have a GameStop literally around the corner from me, and I bought new Nintendo controllers on Amazon. Like I could walk around the corner and get them, but I chose Amazon instead. That's how bad GameStop is. Right. And I apologize if anyone here works for GameStop or something. I should have said that. But they absolutely should do it. But that's a different argument. Like what MicroStrategy is doing it and GameStop is doing it. Like they're doing it because the rest of their company isn't that good. And like, this is like, if you have cash, you should do this. Semler, I think, is actually doing it because they're going to have expenses. And I think we're going to see more of that. I mean, the companies that we know, like Apple and Microsoft, like they have a tremendous amount of cash on their books. And they can do several things with that, right? They can just hang on to it, in which case it's losing value. They can go buy back their own stock and pump up their own stock. Well, that, for a lot of companies, has turned out to be a bad idea. Especially when we're going into a period, we're going into an election cycle. We could see interest rates stay higher. We might not see as much growth in the future, all those things. Like they could buy back their own stock. They could use it to acquire other companies, acquire other technologies. But I mean, they have so many billions of dollars. Like how many companies can they possibly acquire? And so then next thing is, all right, take a few percent of that and buy Bitcoin, because Apple knows their costs are going up. Yeah. Right? Their expenses are going up, and there's a limit to how much they can charge me for an iPhone. Right? I mean, I don't know if they've hit that limit yet, because I keep paying for new iPhones, but there's a limit to how much they can charge, even as their expenses go up, even as they have supply chain issues. And so why wouldn't they go buy a little bit of Bitcoin, not only for the inflation hedge, store of value part of it, but I think there's an efficiency play there as well, which says Apple, as you all know, I mean, I saw someone here is in the UK and such, Apple, Microsoft, like all those companies, they have offices all over the world, because it doesn't make sense to always be bringing money back to the US from a tax perspective or whatever. And in all of those countries, they have to have bank accounts, right? And it's not that easy to be moving money back and forth. Well, Bitcoin's pretty easy to move around the world. Like you don't have to worry about banks and Swift and API, like all that. You just go, okay, well, we have our Bitcoin wallet. It's the company Bitcoin wallet or the company Bitcoin account or something. And it all just sits in there. and we can get it to whichever country we need it in at any point. Now, I don't know what the like IRS tax ramifications are of that, but from an efficiency standpoint, with all their offices elsewhere in the world, they might be able to move money back and forth easier using Bitcoin than they can using banks, and maybe
And
cheaper.
much cheaper too, right? I
Yeah,
think I saw a transaction that was close to $1 billion recently, and the fee was $105. And when you think about what the fees would be on that for moving traditional fiat currency around the globe, it would be
yeah.
millions
It's
of
just,
dollars.
right. It's a significant savings, and they just have to juxtapose that with what's the risk? What's the risk and the value of this Bitcoin going down, right? And that's the risk there. How much risk do we have in the value going down, and how much risk do we have in the technology because we have to control the keys? Like what if it gets hacked or exploited or something? It's not like dollars where we can go get it back. If someone exploits the Apple wallet that has $1 billion worth of Bitcoin in it, Apple just lost $1 billion. Right now, if
Yeah,
Apple loses $1 billion, I don't even think we really care.
right,
But someone's going to lose a job over it.
right. Yeah, yeah. So shifting gears a little bit, um, and I know that you're more of a finance guy and less of an accounting guy, but do you think that the FASB's recent shift to fair value accounting for digital assets, where they have to mark to fair value at the end of each reporting cycle, do you think that that move impacted this decision at all, or do you think it was maybe just noise?
Oh no, I think it absolutely does, because before that, like the two main companies we knew of that had Bitcoin, right, were MicroStrategy and Tesla, and they could only what they could, I think, I mean, you can tell me better, but they could only mark the price down, they couldn't mark it up,
Right. Yeah, you
right?
can
So on it,
impair. You
so
would impair the value. Yes, exactly.
right, so if they buy $100 million worth of Bitcoin and it goes to 300 million, it still shows up as 100 million on their balance sheet.
Hmm.
Right? And when you're a publicly traded company, and that it can't, from an accounting perspective, translate to the stock price. Now, everyone can look at it and go, yeah, but we know what it's worth.
Right.
We know at any point they can turn that back into cash and it becomes 300 million. But the fact that they can now say, we have this on our balance sheet, and as the price goes up, the value of our balance sheet goes up. I think that plays a big part in it, because that's one less thing they have to note, and that's one less thing they have to talk to their investors about and have a call about and everything, and that's one less thing they have to go, well, we have all this Bitcoin, like, what it's worth, but we're not allowed to put that in our books. And when everyone's just hurriedly looking at their balance sheet, they're like, oh well, they only have $100 million worth of Bitcoin. We all know it's 300 or whatever, but it shows up as 100. I think I think it plays a big role, right? Because they can do it with everything else. Why can't they do it with that? And now that they can, I think that plays a big role. And I think we're going to see a lot more companies doing that. Between that and the ETF approvals earlier this year, which kind of gave some I don't want to say regulatory clarity, but like the regulatory thumbs up to go, this asset is okay.
Hmm.
I think a lot more companies are doing that, and we've seen where companies have started buying the ETF, right? They're just buying the ETFs instead of buying Bitcoin outright.
Hmm. So we alluded to this earlier in the discussion about, traditionally commodities, like we talked about with gold, if the demand for those go up or the price goes up, typically there's a increase in the supply that follows because they ramp up production, whether it's on oil or gold. Now with Bitcoin, we know that the supply is fixed, and the release of that supply is on a fixed schedule, to where every 4 years or so it's cut in half, the issuance rate. I think per day now it's about 450 Bitcoin that comes onto the market. And so what impacts do you think that that aspect of a commodity, knowing some of the variables are fixed that traditionally are not fixed, what kind of impacts do you think that has on the overall Bitcoin price and just the long-term volatility of Bitcoin as an asset?
I mean, it has a tremendous impact on the price because, again, we know those things, right?
Mhm.
We can't produce more. No one can decide to produce more. We're not going to, a meteor isn't going to hit us and all of a sudden we're going to have more Bitcoin,
Yeah.
right? Like this is how much there will ever be. And that's fixed into the code. So that plays a big part. I think the transparency plays a huge part as well. And I mean, transparency of the chain, knowing where they all are. You can look at things like, if all of a sudden there were, 10,000 Bitcoin that were moved from cold storage to an exchange, we speculate that someone's getting ready to sell 10,000 Bitcoin. Because why else would they do that? Well, we can see that in real time. And I think that's important. We've never had an asset like that. There's never been an asset where you can see in real time where it's moving, and if it's moving to a place where you can really easily sell it, or it's moving off the place where you can really easily sell it. And we can look at data from the last 10 years of Bitcoin and say, when that happens, here's what we see happen to the price. Right. And we can kind of guesstimate as to what will happen. It doesn't mean it always does, but we can look at so much data. We can look at how many Bitcoin are actually in profit, how many wallets have Bitcoin in profit, how much Bitcoin has not moved in the last year or in the last 3 years, and make inferences from that onto the price, which helps companies determine, or individuals, helps you and I determine, do we want to buy or not, which is data we've never had before. So we don't necessarily know how to do it, we're not sure that this is going to be how it goes. We're not sure that data point always equals price go up or price go down. But I think that level of transparency makes especially businesses feel better, because businesses are not most businesses, other than MicroStrategy now, are not in the business of speculating on commodities. Right? Like famously, I think several years ago, when oil prices and gas prices shot through the roof, Southwest Airlines actually did really well because they had hedged out their gasoline prices for like 2 years. And then all these like oil companies and gas companies started trying to play in the futures market and options market and stuff. But their business is not making money because their futures and options contract go up in value. Right. Their business is, we need to keep our expenses here, or know what our expenses are, because we get to control the revenue piece. We get to control money coming in, and we need to keep our expenses at a certain place. And I don't think most people get that. Like, they're not in the business. Southwest Airlines is not in the business of speculating on gas prices. They're in the business of making sure that they don't go up markedly right now.
Yeah.
Right. They have to keep those expenses kind of where they are, because they can offset that on a long-term time horizon. They can't offset that on a short-term time horizon. So I think the transparency of Bitcoin makes it that much more attractive, because we can see what's going on in real time, and it's liquid in real time. So if a company's like, oh crap, like we got $100 million worth of Bitcoin on the books, some whale just moved 100,000 Bitcoin into Coinbase, let's get out. Like, let's just start selling and get out. Or can we hedge against it using options or something like that? And they can do it in real time. Right. I think that is huge. And as they learn that, they're going to realize the benefits of many more blockchain applications is that level of transparency and that level of liquidity they're going to see in other assets. We're eventually going to have probably tokenized versions of oil futures or something that everyone's going to be able to trade immediately. And they're not going to do it to try to make money. They're going to try to do it to do what hedges are supposed to do, which is hedge against their future expenses.
It's interesting, because I think that it's one of those assets that we've never seen before, where, ultimately most people don't see Bitcoin as a quote unquote stable asset. But I do see, with what you're mentioning about the transparency and the predictability of like the supply and all of that, I kind of almost see in 5-10 years from now that it will actually be considered a very stable asset in the eyes of the masses, because you have this predictability and you have this data that's available to you that allows you to kind of manage those risks in real time, like you're mentioning. So I think it's insane for most people to think about Bitcoin as anything but a volatile asset. But I do think that the characteristics that you're describing really do lend itself to be more stable, in the future. Obviously, we're still in kind of the early stages of this asset class, but yeah.
And you're right in that as more people and more businesses and such are buying or are owning Bitcoin, it's likely to get more stable, because because they're going to be trading against each other, and they're not in the business of speculating. And they don't want that volatility. And there was speculation that the ETFs were going to bring more stability to the value of Bitcoin, because the ETFs are just going to hold it, right? They're not trading it. They only trade it if we trade it, right? They have to sell if we all sell, and we're all only going to sell if the price moves significantly, right? But most people now are in Bitcoin for kind of a long term, and they're not, full on 100% in Bitcoin. They're like 2 or 3%. Well, the 2 or 3%ers aren't going to sell because the price went down a little bit. So you likely, the more businesses that start putting it on their balance sheet, the more people that start allocating that 2, 3, 4%, you're likely going to see more stability. We can't guarantee that,
Right.
but in theory, it makes sense. And that's all we can do here is go, here's what makes sense in theory.
Yeah. Yeah. It's interesting that you talk about tokenized oil future, because I kind of see ETH as like kind of digital oil in a sense. And I know obviously it's a totally different thing from what you're discussing with tokenized oil futures, but kind of in my mind, ETH as an asset is oil for that next iteration of the internet. And I'd love to get your take on the SEC. Just, I think it was even in the last 12 hours, the SEC dropped its case against Consensus, kind of alleging that ETH was a security, or ETH 2.0 was a security. And I would love to get your take on that. And if you think that this, coupled with the ETH ETF approval and going live potentially in the next couple of weeks or months, if you think that ETH will follow suit on balance sheets as well. I know that it's a different, it's not as much of an inflation hedge in this standpoint, or at least that's my impression. It's more of like a hedge against needing to hold ETH to be able to do business activities in the future. But I'd love to get your take on kind of ETH as an asset, and if you think more companies will start to move in that direction.
Yeah, again, all I can do is go theoretically, like logically, what do I don't think companies are going to start holding ETH on their balance sheet as much, because we know it's a totally different animal. They would have to see, most businesses would have to go, where does this fit into the future of my company? Like, where does this fit what I do at my company? And if it is a company, like, let's go back to Apple, right? Apple might own it because they might go, look, we're launching some on-chain stuff, right? And it makes sense for us to own ETH now, because in the future, we're going to have to transact on the Ethereum blockchain. And it would behoove us to have ETH here, wherever it is today at 3,500 or something, than waiting for it to be at 10,000. That would make sense for us. But for most companies like Semler Scientific, it probably doesn't make sense, because it's not a hedge against inflation. I mean, you say it's oil, I say it's more like owning Amazon. And most companies don't own Amazon stock, right? Even though it would have been a great investment. Like, imagine if MicroStrategy had bought Amazon stock back in 2001, they would basically be like, Saylor would be Warren Buffett at this point. But they don't do that, because it's so different. On top of that, I think it's going to take a long time for a lot of people to realize there's a big difference between Bitcoin and ETH, and what those differences are, and why you hold one over another, and what the issuance policies and all that. And it's not meant to be a store of value. So I don't see most companies holding ETH on their balance sheet unless it is strategic to what their business does.
I completely agree. I think that you're companies like Visa that are maybe going to be leveraging the ETH network as part of their core kind of, business in the future, they need to hold ETH but again, it's not a store of value. It's like you're saying, buy it now so you don't have to go out and buy it at a higher price later, because you're going to be leveraging this.
Exactly.
And if you're using the security and the, the finality and the transparency of the ETH network as a business use case, it might make sense. But I agree with you. I think that Bitcoin, like you say, that's the inflation hedge, the store of value, whereas ETH is like, okay, do we need this in our business? Does it make sense? Otherwise, like you say, you're just speculating. You might as well be buying up Nvidia stock, as a result, which could be a great investment. That doesn't mean it's
right.
Your business could have upside on that, but like you say, it's more of a business use case versus
that's not your job. Like, your job isn't to speculate on other companies, just like your job is not to speculate on the value of ETH, unless you're going to need it for to transact. But I don't see most companies doing that. Yeah, again, the tech companies might do it because it makes sense with their line, for their line of business. And look, it's all transparent, right? So if we saw Apple or Microsoft or Amazon buying a bunch of ETH, which we would know if that were happening, I would totally, I would speculate and go, oh, they're going to launch something on chain. Like they're about to launch something, that whatever it might be.
Mhm.
And I kind of speculate on that, but they're not going to do it, I don't think, to like a Bitcoin type hold on their balance sheet.
Right, right. It's very interesting. Yeah. And I think that, like you say, I think um, the public doesn't necessarily know that or recognize those differences there. And I think that it's a big reason why, um, when you talk to crypto people, I feel like it's a lot easier to discuss Bitcoin as like a valuable thing because of that, the aspects and the kind of characteristics that it has as an inflation hedge. It's more nuanced to talk about it ETH because of how it's leveraged in tech companies and things like that.
Right. And yeah, and people are having a tough enough time figuring Bitcoin out.
Hmm.
Look, I think more businesses and more people will understand ETH better
Hmm.
because it's a better story. Like it's more akin to a technology company,
Hmm.
right? It's closer to that than Bitcoin is. Again, we haven't needed a store of value for like 20 years because we haven't had inflation. And the dollar has been the store of value. Like if you didn't want your assets to go down in value, you just held dollars in the bank.
Hmm.
There's no volatility there.
Hmm.
So that's a hard thing to get across to people that you need that because very few people own gold or anything related to gold for a while. I mean, I talk to financial advisors all the time. I was one. We didn't put gold in people's portfolios because why would they do that? You could hold, you'd rather hold the NASDAQ or something or the S&P 500. It was better for them.
Hmm.
So I think ETH is an easier story for people and businesses to understand, but they're also, most businesses are going to go, well, this doesn't make sense for us to own.
Hmm.
Right now, it makes sense for you and me to own it personally for other reasons, and it fits in a different sleeve of your financial portfolio, right? It's not, and I don't know if we want to talk about that, but I've said most people right now, most financial advisors look at the crypto sleeve, right, which fits within the alternatives. But to me, it should be looking at your overall, like your assets, your life, and I'm talking now it's from a personal perspective. You look at your life. How am I earning my money? How have I saved my money? What is my money invested in? What could happen to it in the future? Could it go down in value? Could I lose purchasing power? All those things. Therefore, do I need something to store value in? That's where Bitcoin fits in. And with that, you go, I could have Bitcoin, I could have oil, I could have gold, I could have real estate. What then is the value of Bitcoin over those other things? If I decide I need something to store value, ETH fits kind of in the tech investment sleeve,
Hmm.
which is I want to invest in something that might be the next Microsoft or might be the next Amazon or the next Google. And that's kind of where ETH fits in. So it doesn't have to be I'm allocating 5% to crypto and of that half Bitcoin and half ETH. It can be I'm allocating 5% to a store of value. And of that, it's half Bitcoin and half gold,
Hmm.
half Bitcoin and half oil or something. I'd go oil over gold, honestly. But that's not financial advice. Sorry. Uh, I have reasons for that, but there's not financial advice. But then I go, okay, how much do I want to invest in tech stocks? Well, Nvidia's already ridiculous amount of price earnings ratio, as is Amazon, as is Apple, right? I mean, like they're almost memes at this point. What
Hmm.
can I get in that's hasn't gotten there yet? Hasn't
Hmm.
gone there yet, that still hasn't even gotten close to what its potential demand could be.
Hmm.
And that's where I can look at ETH to fit in there.
I love that kind of distinction between Bitcoin as like your store of value in your portfolio versus the tech stocks. I haven't really heard that so succinctly put, where it's like, okay, don't think of it as crypto assets. It's a store of value, and in this other basket of assets that kind of has similar characteristics versus the rest of the crypto industry, the altcoin market, and ETH as these kind of tech stocks or I like that a lot. Kind of on that same track of, you know, stores of value. I'd love to discuss how Bitcoin's volatility and correlation metrics compare with those of traditional inflation hedges like gold. What would be our take on that?
Bitcoin's more volatile
Right.
than gold, right? I mean, it's well, Bitcoin's more volatile, which we all know,
Hmm.
and we kind of know the reasons for that, right? And the reasons are it's more liquid, right? It's 24/7, 365 anywhere in the world, and a Bitcoin is a Bitcoin is a Bitcoin anywhere in the world. Um, it's really easy to buy, sell, trade. Um, part of that volatility is, of course, the different rules for trading Bitcoin everywhere in the world, right? Which is my Bitcoin is the same as someone's in Europe or someone's in Asia, but they might be able to trade it at 100x leverage and I can't.
Hmm.
So when they buy it at 100x leverage and the price trickles down a little bit, they get liquidated,
Hmm.
which causes cascading prices down, which affects my price here, but it doesn't matter because it's the same Bitcoin,
Hmm.
right? Like I can check the price on 18 different exchanges around the world and it's roughly the same because
Hmm.
you can easily move it around. It's the same thing. So we've never seen anything like that. There's nothing even remotely close to that anywhere in the world because it's not a physical asset that has to be delivered somewhere. It's
Hmm.
not even like oil, which is literally liquid. And you can literally put it in pipes and take it around the world. And natural gas, you can put in pipe. But all that stuff is expensive and it takes time. Like I can send you a Bitcoin wherever you are in the world and it takes 10 minutes.
Hmm.
I can send it from exchange to exchange and it takes 10 minutes. So the level of volatility, I think, gives people a lot of pause to go, oh my, and it creates problems because you probably know this when you started getting into Bitcoin and into crypto, the 24/7, 365 with volatility is like it's stomach curdling, right? Like I remember when I first learned about it and I first bought it and I didn't even tell my wife I was buying it. And I would wake up in the middle of the night and check Coinbase at like 2 in the morning.
Hmm.
And I wasn't waking up for that, but that was just my natural react. I was half asleep, and the first thing I do is look over and see what the price was. And it
Hmm.
was moving. And if it moved up or down a lot, now I'm awake.
Yeah.
But that's a problem for a lot of people because you think of store of value inflation hedge as something that doesn't fluctuate in price a lot.
Hmm.
And every time we see the Bitcoin price drop significantly, you get 1,000 people on LinkedIn and Twitter going, well, some store of value this is,
Hmm.
right? But a store of value is meant to be long term. It's not meant to
Yeah.
be storing value or hedging against tomorrow, right?
Yeah.
Nor is it meant to be a hedge against stock prices. That's
Hmm.
the thing. Like if the Nasdaq tanks, Bitcoin's going to tank too,
Hmm.
right? It probably for the same reasons. It's probably because the interest rates went up. Probably because like the Fed decides to raise interest rates, or there's a war going on, or something. Like they're
Hmm.
going to move kind of the same because they're still based on supply and demand. They're still based on the fact that if if I want to, if I have more money to buy it, I'm going to buy it. If I
Hmm.
have less money, I'm not. I'm going to have to sell so that I can pay my bills.
Yeah.
Right. So I think the volume, the volatility of Bitcoin versus others is off-putting because we don't know how to deal with it. We
Right.
don't we don't have, and I don't mean don't I mean technically we don't know how to deal with it, but psychologically we don't know how to deal with that. That's the big problem. It's like people are horrible at trying to manage their own finances
Hmm.
because they're emotional about it. And we don't have the emotion to deal with a 24/7, 365 volatile asset that has different rules depending on where it's traded in the world.
Hmm. Yeah. And when you look at, stomaching those gains, people often avoid the losses more than they kind of celebrate the gains. And I think when you look at Bitcoin historically, correct me if I'm wrong, but I think the compounded annual growth rate has been like 60% per year. So when you look at the growth there, you can't have those increases in price without the corrections back down. And I think that that's what you're talking about as well with like stomaching that and detaching yourself from those emotions is a challenge. And that leads me into my next question, which is, you know, with companies adding Bitcoin to their balance sheet, people celebrate them when the price goes up as a stock price and when Bitcoin is doing well. But how do you think companies like Semler will weather the storms if there are like 30% corrections in the Bitcoin price, which can and does happen? Do you think that the signaling with them kind of adding what they added so far, I'm not sure what percentage of their overall balance sheet that made up, but do you think that these companies that are getting in now are going to be hodlers? Like, are they in it? Or obviously it's going to be a case by case basis, but do you think that those who are like kind of the first movers in this cycle right now are going to be the hodlers, or do you think they're going to get spooked potentially by those corrections that are inevitable?
I think the likes of Semler are probably hodlers because they're learning it from Saylor, right? They're learning
Right.
it from MicroStrategy, who is like the world's hodler, right? He's the face of holding on to Bitcoin no matter what. So I think those like that group is just going to hold on to it and have it on their balance sheet. Now, what happens when a publicly traded company like that by the way has actual services and actual revenue and other things going on? What happens when the price goes down and they have to answer to that at their quarterly report? And Eric Semler might be like, we have 1,000 other things to talk about with relation to our business. This is not what we want to discuss.
Mm.
And maybe he goes, you know what, forget it. Like, I don't need this headache. I have enough headaches with running my business. I don't need the headaches with, you know, 98% of the questions being about Bitcoin and the price
Mhm.
and being second guessed and all that. Um, I'm curious as to what's going to happen. And I'm curious as to what's going to happen if, their next quarterly quarterly call, what if Bitcoin has gone from wherever it is now to, 100,000, and all of a sudden their $40 million is worth 60 million.
Mhm.
Or if people are going to be like, hey, are you going to buy more? Are you going to become MicroStrategy? Are you going to go take out a loan and buy more Bitcoin and just become another Bitcoin company? Like that, I think that might be a problem for some of these that actually have a going concern business, right? For MicroStrategy, which I don't know how much other business they do, but they couldn't have been making much of a profit because the stock price didn't move for like 20 years,
Mhm.
right? GameStop, it would be much better for them to own Bitcoin because
Mhm.
they're all, their earnings report the other day, it's horrible. They're
Mhm.
closing stores left and right.
Mhm.
So it'll be interesting to see what happens the first time a company like Semler Scientific goes through a quarterly call and the price of Bitcoin has moved, to see what kind of questions. And if they go, we don't need this frustration. Like, we don't need this
Mhm.
aggravation. We don't need to answer questions about this. We have all these people working for us. We have all these things in the pipeline, whatever. That's what we want to talk about.
Mhm.
And then maybe it's not worth the issues.
Right. Yeah, yeah, either way, up or down, it's going to be interesting to tune into that call to see how much is focused on that as a um yeah, as a topic of discussion versus
Yeah.
the actual business and what they're doing on the ground.
Yeah, and Brandon asked here, does the lack of education about Bitcoin and crypto hurt a company's reputation with stakeholders? Um, I think it probably hurts and it helps, right? The people that know Bitcoin probably are stoked about it, and obviously the price of Bitcoin is going to affect that, right? If the price goes up, no one cares. Well, no one cares the negative. Everyone's like, this is awesome. The price goes down, you're going to have stakeholders being like, why are you taking time and effort and money to do this? I own your stock. I didn't buy your stock. I bought, if I want to buy Bitcoin, I'll buy Bitcoin,
Mhm.
right? So you're going to have those kinds of issues. I don't need you buying it for me.
Right.
Um, so I think the lack of education is kind of a problem. And I think that's where I was getting at, that let's see what happens the first quarterly call if all the questions are Bitcoin related and Semler's like, we don't need this aggravation. Or they go, quick link, here's all the MicroStrategy stuff about it. Go read about it yourself.
Yeah. So kind of wrapping things up, I had a couple of questions for you related to, you know, for companies that are looking to potentially add Bitcoin as an inflation hedge, what are some considerations that they should be making, and what should they be kind of evaluating for the pros and cons of this when they go to do exactly that? I know we've talked a little bit about it so far, but
Yeah.
how would you summarize the key takeaways for businesses in this realm?
For businesses, I mean, whether it's, we've talked about publicly traded companies, but even private companies, right? Like, where does it fit in what you're doing as a business? Is there a good reason for it? Don't, I would say probably don't do it just to speculate on the price of Bitcoin.
Yeah.
If it makes sense, if you're looking at your business and going, our expenses have gone up, but we can't raise our prices, that much to offset it, our expenses are going to go up in the future. That's when something that is a store of value takes place. So that's evaluation number one. Again, whether you're a private business, public business, whatever, do we have a need to store value somehow because our expenses are going up faster than our revenue? And that's where a store of value fits in. Then, so that's evaluation number one. Number two is, does Bitcoin fit that, and why? And you got to look at things like security, like how am I going to hold it? Do I understand how it works? Do I want to just go set up a Coinbase account and buy it and then move it into self-custody? Does someone at the office know how to deal with that? Do I have an accountant that understands what's going on? That's got to be a big one, right? My accountant better be able to understand what we're doing with the Bitcoin. Are we going to keep it safe? Because there's safety and security issues. Do I know how to vet a custodian if I'm going to use a custodian? And I say all that, look, shameless plug, the company Bespoke Group that I work for, we do a lot of custodying of crypto in the United States and elsewhere in the world. And we look at the quality of the custodian. We look at the regulations surrounding them. Are they part of banking regulations? Will they get bailed out if there's a problem? Are they keeping your Bitcoins segregated from their balance sheet? Those kinds of things that we look for, just like you would look for. I mean, you wouldn't go put $100 million in one bank. So are you going to put $100 million at one custodian that if it gets lost, your money's gone? Like you have to think through those questions and understand it. Do you understand wallets and keys and all that? Or are you the type of company where the administrative assistant has passwords written on a sticky note taped to the monitor? And therefore, you can't do that with the private key. Can't do that with the seed phrase, right? Like you're going to have to go through some of those security questions, and there's some other risks to it, but are those offset by the fact that costs are going up faster than revenue, and we have to offset that somehow? And we're probably not going to buy much of gold, and we're probably not going to buy a bunch of real estate and oil. So what else can we do?
Yeah. I think another key aspect is understanding what Bitcoin is and how it functions and why it might be a good hedge against inflation. Because if you don't have the conviction to understand what Bitcoin can do and what it's doing, I think it's harder to kind of weather those, whether it's small or large volatility, and have the conviction to, hold on to it if that's what you decide to do, and explain to shareholders why you're holding on to it, in plain terms.
And that's a good point, because you brought up earlier, like the CAGR of Bitcoin over the last however many years, and everyone's like, it's the best performing asset ever, and it's gone up 100 billion% or whatever it is, some infinite percent, which is what a lot of Bitcoiners say, but it doesn't make sense because it literally started from zero. There was zero investment in Bitcoin from the beginning.
Right.
A company that had to go get angels or something. There was zero. You have to look at, where is it going from here forward? Because that's all that matters. It doesn't matter what it did. And you can't go in going, oh, well, if it went up, 10,000% in the last few years, it'll do that again, because it doesn't have that room to grow. I don't think it might, but you can't think of it that way. You have to go, what is my plan for it? Is my plan that if it gets to a certain point, I sell half? Do I always keep 3% allocation no matter what happens, and I can rebalance anytime I want to? Am I just going to hold this, I'm going to put 100 million in now and just let it run? Like, you have to have a plan for it also, and know what the plan is. And part of that goes back to the education. What is it? Like, why am I even holding it? You have to have those questions answered before you can effectively go into this.
Very interesting. Yeah. Well, this has been an amazingly enlightening discussion, Adam. I really appreciate it. Can you just mention any resources or additional opportunities for listeners, or ways that they can connect with you?
Sure. So my company is Interaxis, Interaxis. So we're on YouTube. You can search Interaxis, Interaxis.io. We have courses for financial advisors and CPAs, by the way, that give CPE credits as well, 12 hours of CPE credits. And I'm on Twitter at Interaxis8, the number 8. And then the multifamily office I mentioned is Bespoke Group. So BESPOKE Group. I think we're .io. I'm going to go with .io on that. I should know those things, but bespokegroup.io.
Well, thank you so much, Adam. It's been a pleasure chatting with you. And yeah, if anyone wants to reach out to Adam, please do so and connect with him at Bespoke Group or Interaxis. So Thank you again, and we will get this up and live in the community shortly.
All right. Thanks, everyone.
Thank you. Take care.